Today, we're exploring how blockchain is set to revolutionize the real estate industry. From tokenization to smart contracts, discover how these innovations are streamlining transactions, enhancing transparency, and more. But before we dive in, we found that 60% of you aren't following us yet. Please do us a huge favor. Hit that follow button and collect our episodes on pods.media. Your support means a lot. Thanks, guys.
Okay, let's unpack this. We've got some really interesting material looking at how blockchain technology is poised to fundamentally reshape the way we think about and interact with real estate.
Definitely.
It's an industry that, well, for a long time has relied heavily on traditional processes, paperwork, the drill, and it feels like we're maybe on the cusp of some pretty big changes.
Absolutely. And what's fascinating here is the potential for blockchain to really dig into some of the core inefficiencies, the complexities that have just been part of the real estate market forever, it seems.
Right.
We're talking about making everything from that initial investment idea all the way through to getting the keys, much more streamlined, hopefully. And for anyone listening who might need a quick refresher, a blockchain is essentially what? A shared digital ledger.
Yeah, exactly. A shared digital ledger. It's distributed across loads of computers. Makes it incredibly difficult to tamper with. Highly transparent, too.
Got it. So we're going to delve into some of the most transformative aspects today. Think about owning like a small slice of a property through something called tokenization, or how smart contracts could, put real estate deals almost on autopilot.
That's the idea.
And the promise of a clearer, more secure system overall. We've even got some really compelling examples of this actually happening now in the real world.
We do. And we should also touch on the challenges, too. It's not all smooth sailing.
Oh, for sure. We'll cover the hurdles and look at what the future might hold. So whether you've ever thought about buying a home, maybe you're an investor looking for new angles, or you're just, interested in how tech is shaking up different sectors.
This should give you plenty to chew on.
Exactly. So let's start with this idea of tokenization. It sounds a bit sci-fi, doesn't it? Representing a physical building as digital tokens.
It might sound futuristic, yeah, but the core concept is actually quite straightforward. Tokenization in real estate is basically taking a physical property, could be an office block, a house, whatever, and representing its ownership using digital tokens on a blockchain.
Oh, okay. Like digital shares in a property.
Pretty much.
Yeah.
Think of them as digital ownership certificates, you could say.
Right. So instead of needing, a huge chunk of cash to buy a whole building,
Exactly.
you could potentially buy just a small fraction represented by one of these tokens. That immediately sounds like it could open things up.
Precisely. And this is where fractional ownership gets really powerful. You take one big, expensive property and divide it into, say, hundreds or thousands of smaller, affordable units, the tokens.
Which lowers the barrier to entry massively.
Dramatically lowers it. Suddenly, people who thought real estate investment was totally out of reach might be able to participate. And getting rent paid out via crypto, that potentially cuts out bank fees, speeds things up.
Makes smaller investments maybe more worthwhile.
Could do, yeah. More efficient.
That really does sound like a game changer. It makes me think of some platforms we've seen like Realty, Lofty AI. What are they actually doing?
Yeah, those are great examples of this in action. Realty, Lofty AI, they let you buy these tokenized bits of rental properties.
Okay.
And often you get your share of the rent paid directly, maybe in crypto, and you can sometimes trade these tokens on secondary markets too.
So it's not just getting in cheaper, it's also about liquidity, being able to sell your share more easily than a whole house.
That's a huge part of it. Traditional real estate is notoriously illiquid, right? Hard to sell quickly. Tokens could potentially trade much more easily, closer to how stocks do.
Injecting some dynamism into a usually quite static market.
That's the hope. It's about democratizing investment, making it more accessible, and boosting that liquidity. But, with all these fractional owners, managing it all, distributing rent,
Yeah.
that sounds complex.
Yeah. How do you manage that?
Well, that brings us neatly onto the next piece, smart contracts.
Right. Smart contracts. Because, yeah, we've all heard horror stories, or maybe lived them, buying or selling property. The endless paperwork, coordinating lawyers, banks, agents.
It's a nightmare sometimes.
Right.
So many intermediaries, so many steps, weeks, months even. It can really drag on.
It feels like navigating a maze, honestly.
It really can. Smart contracts, though, they offer a way to potentially cut through a lot of that complexity.
Okay, so for anyone listening who's maybe not totally clear, what exactly is a smart contract? In simple terms.
Okay, simple terms. It's basically a self-executing contract. The rules of the agreement, the if this, then that stuff, it's written directly into computer code, and it lives on the blockchain.
Yeah.
It automatically runs, executes the terms when certain predefined conditions are met. No need for someone to manually check and sign off ideally.
Okay, so how would that work in a real estate deal? Give us an example.
All right, imagine a smart contract for a house sale. It could be coded so that the buyer puts the funds into the contract, kind of like escrow.
Okay.
Then once the system verifies that, say, the digital title has been transferred, or maybe a digital inspection report is approved, bang, the contract automatically releases the funds to the seller.
Wow, so it just happens.
No
Automatic.
principle. No waiting for the bank transfer, no chasing lawyers to confirm things. If the conditions programmed into the contract are met, it executes.
That sounds incredibly efficient. You're automating key steps, taking out some of the human element, which is often where delays happen.
Exactly. And that automation could mean lower costs, fewer intermediary fees, right? But also potentially less risk of fraud or disputes, because the rules are clear in the code and the execution's automatic once those rules are satisfied.
It builds trust into the system itself through the code.
That's a good way to put it.
It really paints a picture of a future where buying property could be, well, almost as quick as sending crypto, like you said earlier. That's a massive shift from today.
It is. It's a significant leap.
But what if there is a dispute? I mean, things aren't always black and white. Even with code, how does that get handled?
That's a really important point. It's still an evolving area. Smart contracts often try to build in mechanisms, maybe links to digital arbitration services, or they still rely on the existing legal framework for complex disputes.
Okay.
But the blockchain record itself helps, right? It provides that immutable, transparent audit trail of who did what and when, which can be vital evidence if things do go wrong.
That makes sense. It's not a magic bullet for every single problem, but that transparency is a big step forward. Okay, let's move on. Another big area is transparency and security in property records themselves. Land registries?
Yes, and this is huge, especially when you think about how fundamental property ownership is. We've all heard stories, maybe even know people who've had issues with unclear titles, boundary disputes, that kind of thing.
Sadly, yeah. Those issues seem way too common. What are the main weaknesses with the traditional systems we use now?
Well, often they're fragmented, siloed. Different departments might hold different pieces of information, not always talking to each other effectively.
Right.
They can be outdated, still relying on paper records in some places, believe it or not, which means they're vulnerable to damage, loss, even manipulation.
Not ideal for something as valuable as land ownership.
Definitely not. And in some parts of the world, unfortunately, they're vulnerable to outright fraud or corruption.
So how does blockchain step in as a better alternative?
It comes down to blockchain's core features. Immutability is key. Once a record, like a title transfer, is locked on the blockchain, it's practically impossible to alter or delete it.
Okay, so it's permanent.
Permanent and transparent. Every change, every transaction, every lien against the property gets recorded chronologically, creating a clear history. And this ledger can be shared securely with all the relevant parties, buyers, sellers, lenders, government agencies.
Creating much more visibility.
Exactly. And because it's decentralized, spread across many computers, there's no single point of failure or control that someone could easily compromise or tamper with. It's inherently resistant to that kind of attack.
That sounds like a massive upgrade in security and trust, particularly, as you said, in places where land record integrity might be a serious issue. You mentioned the UK was looking into this.
Yes, HM Land Registry in the UK has been running pilots. They're exploring using blockchain to digitize records, improve efficiency, and bolster security for property transactions. It's a significant validation when a major government body starts seriously testing this tech.
Absolutely. And it's not just the UK, is it? This seems to be a global trend.
Oh, definitely. The UK is just one example. We're seeing really diverse applications popping up all over the world. It's quite exciting, actually.
These real-world cases really bring it to life. Can you share a few more examples? Where else is this happening?
Certainly. Take Switzerland. A company called Brickmark. They tokenized a huge commercial property in Zurich worth about $134 million using the Ethereum blockchain. That was a major early move for high-value real estate.
Wow, $134 million represented digitally. That's substantial. What about places known for being forward-thinking on digital assets like, say, Dubai?
Good example. In Dubai, AMAC Properties, who are a massive developer there, they've partnered up with a company called Mentra, their plan, to tokenize up to $1 billion worth of their real estate.
$1 billion. Okay, that's serious commitment.
It really is. And it fits perfectly with the UAE's whole strategy of embracing digital assets and blockchain. They see it as key to their future economy.
So it's not just niche startups. The big established players are getting involved too. Are there examples focused more on smoothing out the actual buying and selling process itself?
Yeah, absolutely. Back in the UK, there's a company called Coadjute. Their focus is less on tokenization itself and more on the transaction flow.
Okay.
They're building a sort of decentralized network to connect everyone involved, the buyer, seller, agents, lenders, lawyers, aiming to make communication seamless, cut delays, get rid of tons of duplicated effort and paperwork.
That sounds like it targets those friction points we were talking about earlier head on.
Exactly. And it's not just developed economies either. What about places where secure land titles are a more fundamental challenge?
Like emerging markets.
Precisely. In the Philippines, for instance, the government's Department of Information and Communications Technology is actually piloting a blockchain system for land titling.
Really? Why there specifically?
Well, think about it. In regions where maybe land records haven't always been secure or where corruption can be an issue, having an immutable, transparent blockchain record of ownership could be transformative. It's about protecting citizens, ensuring property rights, and fighting corruption at a really basic level.
Wow. Using blockchain to tackle systemic issues like corruption. That's powerful. Any other examples spring to mind, maybe in Asia?
Yes, Japan is interesting too. Mitsubishi UFJ, a huge financial group there, is exploring blockchain-powered REITs, real estate investment trusts.
Okay, REITs, but on the blockchain.
Yeah. The idea is again about broadening access, using blockchain's efficiency and fractionalization potential to allow more people to invest in these typically large-scale real estate portfolios.
So it's really a diverse picture. Tokenizing big assets, streamlining transactions, securing government records, opening up investment vehicles.
It covers a lot of ground, shows how versatile the technology could be in this sector.
It definitely seems like the potential is there and people are actively experimenting, but like with any major tech shift, there must be roadblocks, right? What are the main hurdles holding back widespread adoption in real estate?
Well, absolutely. It's not a simple plug-and-play situation. There are significant challenges. One of the biggest right now is probably regulatory uncertainty.
The legal side.
Exactly. How do you classify these tokens? How do you handle cross-border transactions? Tax implications. The rules are still being written, and they vary hugely from country to country. That makes businesses hesitant.
Understandably, it's hard to invest heavily if you don't know what the rules will be next year. What about the tech itself? Is it easy to just slot blockchain into how the real estate industry works now?
Not always, no. You've got decades of established practices, legacy IT systems, legal frameworks built around paper or older digital formats. Integrating blockchain, which is fundamentally different, can be technically complex.
Yeah.
You need interoperability, you need standards. It requires significant effort and investment.
And I guess you might get some pushback from the established players, the banks, the agents, the lawyers who are central to the current system.
That's definitely a factor. You could call it market resistance. Some traditional intermediaries might see blockchain as a threat to their business model, understandably. Disintermediation sounds great in theory, but if you're the intermediary...
Yeah, maybe not so appealing.
So winning over the incumbents or finding ways to collaborate is crucial.
And for users, for you and me wanting to potentially buy a token or use a smart contract, are there practical challenges there too?
For sure. Things like custody. How do you securely hold these digital property tokens? What happens if you lose your private key, your password, essentially? Unlike a bank, there's often no central authority to reset it for you.
Right. Be your own bank also means be your own security.
Pretty much. So making it user-friendly, secure, and providing solutions for things like key recovery or inheritance planning for digital assets, those are really important practical hurdles for mainstream adoption.
Those are all really significant points. It's clearly not just about the shiny tech. There are real-world complexities. But okay, looking past those hurdles, what's the future outlook? Where could this realistically go?
Well, despite the challenges, the long-term trajectory looks, I think, pretty positive. We can definitely anticipate increased liquidity. As tokenization matures, imagine global, 247 markets for trading fractions of property, like the stock market, but for buildings.
That would completely change the game for real estate as an asset class.
It really would. And that leads to greater global accessibility.
Yeah.
You could be sitting here and invest in a fraction of an apartment building in Tokyo or an office block in Brazil, maybe using stablecoins, without needing overseas bank accounts or dealing with complex foreign regulations directly.
Opening up diversification opportunities massively.
Exactly. And that automation we talked about with the smart contracts, I think we'll see that continue to evolve towards true end-to-end digital transactions.
What would that look like?
Imagine smart contracts handling the purchase agreement, maybe AI doing virtual property inspections or valuations, blockchain-based mortgages getting approved almost instantly.
Yeah.
The whole process from finding a property to getting the keys, potentially becoming much, much faster and more seamless.
A genuinely streamlined experience, that would be welcome. And you mentioned ESG earlier, environmental, social, governance factors.
Yes, that's another exciting avenue. Blockchain could be used to reliably track and verify things, like a building's energy efficiency, the source of its materials, maybe even fair labor practices during construction.
Okay, how?
By recording that data transparently on the blockchain, this could allow investors who care about sustainability or social impact to specifically find and invest in green or ethical properties, with proof to back it up.
So adding another layer of data and value beyond just the financial?
Guessing it?
Okay, so bringing it all together then, it really feels like blockchain isn't just tinkering around the edges of real estate. It has the potential for some deep fundamental shifts.
I think that's fair to say. Through tokenization, making ownership more accessible, through smart contracts, making transactions faster and cheaper, and through the blockchain itself, providing transparent, secure records, we're looking at a potential future real estate system that's faster, arguably fairer, and certainly more global than what we have today.
Yeah. The takeaway seems to be, despite the hurdles we discussed, the regulations, the tech integration, the market resistance, the underlying potential is huge. It feels less like a question of if blockchain will impact real estate and more about how quickly and how deeply this transformation will actually happen.
I agree completely. And that leads us to a final thought for you listening. How might these changes affect your future relationship with property? Whether you're thinking of buying, selling, renting, investing, the rise of tokenization, fractional ownership, automated transactions, it could change things quite profoundly.
Yeah, it's worth pondering not just how you might buy or sell differently, but what it means when any asset potentially can be broken down, digitized, and traded globally like this.
Exactly. What are the broader implications of tokenizing everything? That's definitely something to think about long after this deep dive finishes.